won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now.
Alrighty, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video breakdown, we're going to be going over some XRP price action. If you all enjoy video breakdowns like this and you take away something valuable, make sure that you smash that thumbs up button and subscribe to the YouTube channel. It does help this channel grow, and we do appreciate the love and the support. Without further ado, let's head over to the charts and go over XRP.
Alrighty, so real fast before we head over to the trade breakdown, I just want to show you all roughly yesterday during an Asia session, I had mentioned to you guys that heading into the week, if XRP can sustain a bullish hold above 35 cents, I will be looking for intraday trades up to 37.5 to 39 cents, specifically mentioning that 35-cent threshold. If we hold that, what my bullish targets are for you all. And I said that if we break down below that threshold, then I'll reevaluate price action, and I'll give you guys another technical analysis update. So heading over to the charts, we were able to scout this beautiful trade position on XRP USD today. I'm going to fully break this down for you guys, starting on the 15-minute time frame, what it was that I was seeing in the market, my entry criteria, some confluences that I trade. In order to become a market participant, give myself an edge in the market. Again, nothing that I constitute here is financial advice. And if anybody wants a more in-depth perspective with over 60 hours of mentoring videos and how it is that I approach the markets, the link is in the description down below for our CYPRX mentorship. You guys can always reach out to me and ask any questions that you might have, maybe even schedule a Zoom call so that way you can meet me face-to-face if you are interested in joining our mentorship program. Again, that link is in the description below our YouTube video breakdown. So starting on the 15-minute chart, before we go down to the 5-minute and the fractal nature of things as to why it was that I was entering in this general vicinity based off of previous banking institution buy areas and areas of interest that I will show you how I identified. I just want to show you all how I identified what direction I assumed that the market was going to go in, right? We are operating always in an environment of uncertainty. So you want to generate yourself a list of confluences based off of market structure, time, price levels, what previous banking institutions are doing. Here at CYPRX, we do not trade any indicator-based strategies. I have a moving average on, but that was just to assist for me and give me confidence in my trade direction. I do not use moving averages as entry criteria, right? Like the majority of these other influencers do. I pay attention to time, structure, and price, okay? So prior to this specific New York session that I was operating in, I had seen that prior to Asia sessions into the London and New York session, that the market makers were continuously doing the same thing. They were pretty much buying at a discount. Where every single day prior to this specific New York session, if we come over here to this price action, we're pretty much seeing the same thing, where we're seeing lows get liquidated, and then we're seeing bulls completely take over all the bearish price action heading into the next day's worth of price action. Same thing here, leading up into this New York session, we can clearly see that bears were temporarily in control of this market, bulls bought from a discount, and then completely overpowered all of this bearish price action. So I was simply just attempting to move in tandem with that order flow. Now, heading into this specific session, I want you guys to pay attention to where previous banking institutions bought from. Here at CYPRX, what we attempt to do is we attempt to teach you how to identify previous areas of interest where banking institutions bought from based off the ideology that if banking institutions are going to buy again or sell again, depending on what your analysis is, either bullish or bearish, that they're most likely going to do it at other areas of interest where the banks bought or sold from in the past. So heading into this specific New York session, we can see structure. Let's first pay attention to structure on the 15-minute time frame. Remember, I just showed you guys that every single time a bearish price action gets printed, bulls are then taking over, buying from a discount. Well, the daily candlestick opened right here at roughly around 2 p.m. or 1400 Pacific Standard Time. So that was right here in this general vicinity. And from this market open, or where the daily candlestick would start at, we had a break in market structure and a higher low created after a previous higher low. So you guys can see here, there was a higher low in the market. higher low after that was created that led to a market break-in structure or a new swing high in comparison to all of these highs in the market. That to me signaled that bulls are in control of this market. So for me, coming into this XRP trade, I think I mentioned to you all that I was going to be looking for intraday trading buys. Again, like I said on the Twitter space, it was roughly about 12 hours ago. So that was roughly around here during this Asia session. Okay, I told you guys I was going to be looking for intraday trades up into 37.5 cents. I try to give you guys my analysis ahead of the time on Twitter. If you don't follow me on Twitter, again, that link is in the description below as well. So seeing that the daily candlestick is printing a higher low, leading to a higher high formation, I wanted to trade in tandem with that. But I didn't want to buy at a high. I wanted to buy at a discount from where previous banking institution bought from. So with that being said, I'm now going to scale down. Think about all the confluences that I'm giving you guys. So right now, what we have generated is that the market makers are printing bullish order flow, where every single day that a new daily candlestick opens, we print a higher low that usually leads to a higher high. You want to be trading in tandem with that order flow, or at least that's how I approach the markets, right? Why would you attempt to swim against a moving river? You wouldn't. You would try and swim with the current, not against the current. So the current for me in this current market, as of right now, based off of what price action is showing me, is bullish, okay? So now that we have our 15-minute area of interest, which we see where the daily candlestick opened here, created a higher low, and created another swing high in the market, we can say that we're operating inside of this A to B move, from this higher low to this higher high. So I want to buy in a discount area or a discounted area where this Asia session bought from. So now we're going to scale down to the 5-minute chart, and I'm going to show you guys how I identified that. Okay. So area number one was this higher low right here prior to the Asia session. Okay. Where the market makers bought at a discount, breaking previous market structure. You guys can see here that all of this previous bearish market structure after this higher low was broken by this bullish leg. Okay. So you guys can see that this was another higher high in the market, just following structure, ladies and gentlemen. It's this simple, okay? But now, something else that I teach the CYPRX students is the manipulation window. Well, something interesting about this bullish leg that I just identified to you all, this happens to take place in the Asia session manipulation window. So for me personally, I wanted to avoid that and trade with the higher time frame order flow that broke out of the manipulation window. So where banking institutions came in after the manipulation window was this higher low, okay? So for me, again, identifying advanced tracking methodology that I teach the CYPRX students, how to identify areas of interest, was this was the first higher low that was created after the liquidity grab and after the market makers broke out of the manipulation window. What do I mean by that? You guys can see here 2 higher lows in the market. But something interesting about this higher low is if we pay attention to fractal price action, if I zoom in, you guys can see this little candlestick right here violated this low. And then it broke market structure. So for me, this was a manipulative move, and I always teach you guys to identify the higher low after the manipulation move. Well, that higher low after the manipulation move would be this higher low right here. So simply identifying that, all I did to gather my area of interest was I highlighted from the candlestick bodies down to the wick. We can go ahead and we can change that template to a blue box, okay? And then I extend that over to my right-hand side. So that way, when I'm trading New York session, I know that this is the first area of interest where banking institutions during Asia session bought from after they manipulated price, okay? You guys see how it's all coming into fruition. So now that we have our area of interest, what's left next to do? Well, we want to be patient, we want to sit on our hands, and we want to understand that banking institutions during New York session are not going to buy from highs. They're going to buy from a discount. So now let's go over to the fractal nature of things. Again, this is the 5-minute chart. I'm going to show you guys how I identified pre-engineered liquidity in the market prior to the New York session and during the manipulation window to be able to sit on my hands and wait. Remember, I attempt to teach you guys on this YouTube channel to be reactive traders, not impulsive traders chasing the market all the time, okay? So now heading into this New York session, we had identified our area of interest. And so many people would be like, oh, Cypress, all you do is hindsight test. No, no, no. Ladies and gentlemen, look at this. Right when this New York session opened, we would have had all of this price action to identify. I'm not making this up. Coming into this New York session, we had all of this to identify. And now look at this. Right when New York session opened, check this out. What can we see about this? Just based off of what I'm teaching. Well, number one, we've identified that the 15-minute order flow is bullish. Now, number two, we've identified a 5-minute area of interest where we want to be buyers from, where banking institutions prior to this New York session during Asia session were buyers from after they exited their manipulation window. Again, I can't give you guys the specific times. That would be unfair to the CYPRX students. However, this is the general area of the Asia session manipulation window, okay? Now, what else do I teach you guys to pay attention to? Well, number one, it's that banking institutions, if they bought from a discount in the past, are not going to want to continue price up, buying from a high. They're going to want to push price action down into a discount. Now, we don't know what that discount's going to be, but that's what our Fibonacci tool is for. And they're going to want to buy from a discount, okay? So look at where price action is when New York session opened. It's operating at a high. You guys can also see, let me get rid of some more of these drawings so it doesn't confuse you all. You guys can also see where London session bought from down here at these lows. Interesting to say the least. Do you realistically think that New York session, for them to profit, is going to buy from a high? No, they're going to liquidate lows. They're going to buy from a discount, either where from London session bought from, or from where Asia session bought from, manipulating early sellers prior to their session open, and then they're going to buy from a discount. So now what else did we teach you all to pay attention to here at CYPRX? Identifying retail liquidity. So now I want you all to take your focus from the Asia session manipulation window and put it on the London session manipulation window. Pause the screen real fast, or pause the YouTube video. Can you identify where the retail money exists beneath London session lows? What it is that we teach you all here on the CYPRX YouTube channel and past video breakouts to identify. Retail traders trend line liquidity. And it's just interesting how it all forms underneath the manipulation window, isn't it? Right? You guys can see here what we attempt to teach you all is to identify the triple touch of a trend line. Well, there is one touch, two touches. The first touch of this trend line just so happens to start in the London session manipulation window. This London session manipulation window is a little bit too big. Let's go ahead and move this just a tiny bit. Okay, so now we can see that during the Asia session manipulation window, they manipulated price. During the London session manipulation window, they manipulated price. Now check this out. During the New York session manipulation window, you guys can see that that third touch of a trend line came into fruition. So now think about everything that I've given you up to this point, where people would say, oh, hindsight testing is garbage and da-da-da-da-da. No, check this out. This is now the New York session open. This is all the price action that we would have had to analyze. Number one, we know that 15-minute order flow is bullish. Number two, we know that banking institutions during Asia session are buying out of their manipulation window from this higher low that we identified and extended all the way over to the right-hand side. Why are we doing this? There's two reasons. Number one, because we want to be bullish above this level. As long as price holds above this level and above where the daily candlestick opened, we want to be buyers. Why? Because the banking institutions are buyers from these levels. Number two, this is an area of interest. We know that banking institutions during New York session are not going to buy from highs. They're going to want to buy from discounts. So where are they most likely, based off the logic that we teach here at CYPRX, going to want to be buyers from? Where previous banking institutions bought from, right? So that is why we're identifying these areas of interest. Now, what do we also have? We see that New York session opened, or price action opened, at a high. We know that banking institutional traders are profit mongrels. They want profit. So they're not going to buy from a high because that would not put them into profit. They're going to want to liquidate lows. Well, in order for us to generate logic as to why they could push price action down, for us to not be impulsive traders and chase this market, we want to give ourselves a reason as to why they could do that. So with that, we identified retail money beneath lows, okay, in the form of a triple touch of a trend line. So now all we have to do is wait for price action to break out of the manipulation window, which we did here at CYPRX, and see how the market reacts to this type of analysis. Check this out. As soon as New York session opens, what happens? Boom. Price action taps into where previous banking institutions sold from, leaving behind during the New York session manipulation window another retail trading trap. This is going to solidify and put the icing on the cake as to why we took this trade. If you all are paying attention and you enjoy these video breakdowns, make sure that you smash that thumbs up button and subscribe to the YouTube channel. This is valuable information, and this is not even scratching the surface of all the content that I give to the CYPRX students on how it is that we approach the markets here at CYPRX, okay? So, again, if you're not writing all of the confluences down, generating a list either in your head or on physical form on paper, you're slacking because you're not really paying attention to how the market makers move. Okay, pay attention. This is valuable information. This is you see no indicators on my charts. This is all just time, price, and structure. That's all you need. That is all you need. You see all these bullish Fibonacci moon boys on YouTube with RSI, MACD, volume, moving averages, all this crap that clouds your judgment when you don't need that. Okay, so check this out. Now we see a retail trading trap. If you haven't identified it yet already, let me get rid of this, clear up some of these drawings. Remember, we are waiting for price action to do something like this, which is pull back down into where previous banking institutions bought from, either from where London session bought from at these lows, or where from Asia session bought at these lows, as long as we hold bullish above this daily candlestick open, which we also identified was right here again at 1400 or 2 p.m., right here in this area. p.m. Pacific Standard Time, okay? We know that. Why are we identifying that? Or why are we paying attention to that? Because we know that this was the last bullish leg, okay? So as long as we're above this higher low, we are in a bullish environment, right? So simply all we did was we now identified that this is another retail trading trap, which is what? Comes in the form of what? Retail resistance. Retail resistance traders anticipating that there's about to be some type of sell move that comes into play here above these highs, right? Being overcharged by their guru to trade retail trading methodologies are taking over-leveraged sell positions from these highs here and from these highs here, anticipating that there's going to be some type of sell-off from resistance. Okay, remember, bank and institutional traders do not trade support resistance. They trade psychological levels. All these numbers over here, okay, to the right-hand side, this is what bank and institutional traders or whales or whoever has more money than you and I trade off of. They don't trade off of imaginary patterns in the market that do not exist, okay? So check this out. Based off of all the logic that we have, now we have a reason to target highs if the bank and institutions do drop price down into a discount. Why? Because there is a retail trading pattern above highs that exists in the market. And we know that whales or institutional traders, again, whoever the smart money is in the market, doesn't matter what you call them, we know that they like to take retail traders' money. Well, there's retail traders' money beneath lows and above highs. You guys see how everything's starting to set up and fall into place. Check this out. So simply all I did was I put a buy limit where previous banking institutions bought from during Asia session, right above where they bought from. So just to scale in, I'm going to show you guys where my buy limit was. It was right above where Asia session bought from, again, highlighting from the candlestick bodies down to the wick and extending that over. I put my buy limit right above that, okay? And my stop loss. My stop loss was right beneath the daily open. So you guys can see here where the daily open was, right? Came in roughly at around 34 1/100th of a cent, right? I put my stop loss right beneath that. Why? Because if that level is broken, that then invalidates my bullish thesis. And then simply all I did with my buy limit is I waited and I sat on my hands. If this trade came into fruition, it would have been a beautiful risk to reward ratio, which it was. And if it didn't, then guess what? The market moves without me, and tomorrow is a new trading day. Everything that I'm teaching you right now teaches you how to control your emotions, not be an impulsive trader chasing the market, and instead being a reactive trader and allowing the market to logically come to areas of interest that you've identified based off of a certain set of things, which is that banking institutions usually, again, this isn't 100% accurate, but most of the time like to buy and sell from where previous banking institutions bought from. So now check out this price action. As soon as New York session breaks out of the manipulation window, again, leaving behind that retail trading trap above highs, you guys can see here, during the New York session manipulation window, they create retail resistance above highs. They're then going to come and target these retail trading trendline lows, where you can imagine that over-leveraged retail traders are buying in the form of over-leveraged positions beneath these levels. Price action breaks out of the manipulation window, so we can go ahead and get rid of the manipulation box. And remember, we're looking for price action to come down into where previous banking institutions bought from, either during London or during Asia, respecting these levels and clearing out all of this retail money beneath these lows. Check out this price action, ladies and gentlemen. All that was left for me to do was sit there and watch my buy limits get executed. Boom. So price action after 2 candlesticks of breaking in the manipulation window, executed my buy limit. straight from where banking institutions bought from the previous day. Now, just to solidify what it is that I'm attempting to teach you guys, how you draw your Fibonacci on properly from where previous banking institutions bought from. Remember, this was a manipulative move where the daily candlestick opened. This was the area after the price broke out of the Asia session manipulation window. So we're taking our fib from the higher low after the liquidity grab to the high, extending that over. You guys can see that banking institutions push straight down into about 90% discount from where previous banking institutions during Asia bought from. Again, properly drawing our Fibonacci on that solidifies another extra confluence as to why it is that we want to be buyers. And now to put the icing on the cake, you want logical reasons as to why the market could go in your favor. Or remember, we had identified that there was a liquidity trap above highs that was set up during the New York session manipulation window in the form of retail resistance. This was my take profit one for this trade. Watch how the market rejects a psychological level. Again, paying attention to the 25s, 50s, 75s, and the 00s. You guys can see that the market completely rejected the 34500 psychological level to the T, which is where my buy limits were. And then we continued with bullish price action to come and liquidate all of those over leveraged early sellers that were trading retail methodologies. Boom, take profit one was hit. If I measure this trade out, okay, if I measure this trade out from entry to take profit, this took 1 hour and 20 minutes, okay? 1 hour and 20 minutes. Think about this, ladies and gentlemen. Again, remember what trading is for. Trading was designed to get you out of the rat race, to release yourself from the matrix. The matrix has everybody thinking that they need to work more hours to make more money, when in reality, the ability to trade these markets was given to you by the elites, okay, in order to escape the rat race. How can you make more money in less time? This was a beautiful trade executed on XRP surrounding the CYPRX confluences that I teach you all specifically on the YouTube channel. This isn't even scratching the surface of what we give to the CYPRX students. Again, if this video clicked with you all and you want to learn more in detail as to how it is that we analyze the market here at CYPRX, the link for our mentorship program is in the description down below. If you all took something valuable away from this technical analysis video breakdown, make sure that you smash that thumbs up button. Make sure that you're subscribed to the YouTube channel. Again, I let you all know ahead of time that I was looking for intraday trades above 35 cents on XRP. Okay, if you guys don't follow me on Twitter, make sure that you do that as well. Link is in the description down below. I truly do appreciate all the love and the support that you all show this YouTube channel. I cannot be more grateful. We're almost at 11,000 YouTube subscribers. As always, blessings. Be cognizant, be aware. Always make sure that you're doing your own research, and I will see you all in the next YouTube video breakdown.
I won't stop till I hear him say